The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Let's get you across the headlines that traders are watching today. And at least 5 companies from mainland China or Hong Kong are planning IPO, dual listings, or share placements in Singapore as Chinese firms look to expand in Southeast Asia. Russia has launched its largest drone attack on Ukraine since the start of the war, before U.S. President Donald Trump is due to discuss a proposed ceasefire with Russia's Vladimir Putin. And U.S. Treasury Secretary Scott Bessent says Trump will impose tariffs at the rate he threatened last month on trading partners that do not negotiate in good faith on deals. And Britain is poised to agree to the most significant reset of ties with the European Union since Brexit, seeking closer collaboration on trade and defense to help grow the economy and boost security on the continent, I should say. All right, let's get across the technicals, shall we? And for that, Louise Bedford from Trading Game joins me now. Louise, it's been a while. Nice to see you. Thank you so much. So we always start with a bit of the scene setter, right, with the All Ords. So what are we looking at today in terms of sentiment?
Well, look, things have been all over the place with the All Ords, no doubt. But luckily now the macro has come back on. And as we know, the macro filter is designed to tell you whether to trade in the Australian market or whether to stay away. So right now we do have the All Ords index above its own moving average, and the volatility surprisingly isn't all that high. It's a little bit higher than it has been in the past, in the last few months, even to up to a year, but there is no concern here. There are no alarm bells going off. So the facts at a glance, we have got 5 hot sectors, 4 cold, and this is the big news, 8 in limbo. So they are neither hot or cold. So it's very important that we act on weight of evidence and we make sure that we're going with hot sectors as part of our general trade setup. To see all of them, you can go to tradinggame.com.au/hot or not for my special report on this topic.
Thank you, Louise. Now, just there at the bottom right-hand corner, you've got the red circle. Just walk us through what you're indicating there.
Yes, so this is a measurement called ATRV, which is average true range volatility expressed as a percentage. So on a week-to-week basis, if we're to look over the past X number of weeks, in this case it's 15 weeks, the percentage move per week of the All Ords is 2.72%. So it's likely to go up or down by 2.72%.
Got it. Thank you. All right. So now let's take a look at the top 20. And you can tell us if it's hot or not and why.
Well, it is interesting. In this market, we have got usually a situation where if your macro has been off, then people come back into those top market sectors by capitalisation. But in this situation, we've got the top 20 as being cold. So people are not going right into that top end of the market. If we have a look at the ASX 100, which should be the next chart, we've got an in limbo situation here when we compare it to the All Ords. So what this is saying is that people are a little uncertain about that top section of the market.
Yeah, okay. So if they are a little bit cautious about that the extreme top of the market, what about the broader sort of 100 and 200?
That is where we need to be. So we're looking underneath probably the top 200. Now, this top 200, we might know that the All Ords is looking at the 500 top stocks and the ASX 200 is the top 200. We do have an extremely similar chart pattern for these two charts. So what we can see here in the lower panel of the screen is the relative strength comparison. So that's comparing the ASX 200 with the All Ords, and the fact that that's a fairly flat line, that blue line is the RSC, the green line is the exponential moving average, the EMA 30 of the RSC, it means that these two are very, very similar. So whether you're comparing your base index to be the All Ords or the ASX 200, it doesn't matter too much. The thing is, they are actually going up at the moment. And as we'll see, in comparison to the US market, we are doing pretty well.
Right. Well, that's some good news there. Now, where else can we look in terms of sector specifics to get an idea as to whether we should be trading or not?
Let's have a look at those sectors, because we're wanting to be in the hot sectors and potentially to lighten or avoid the cold sectors. So communication services is just going beautifully. I mean, look at that, through that layer of resistance. Sure, it's against a tiny little layer of resistance right now, but when you compare it to the All Ords, it is going so gorgeously. I hope everybody is overweight in that sector. Whereas if we look at the usual charmer, which is information technology, that is in limbo. And as we can see, it has had a beautiful return to strength. It is currently above its moving average. However, when we look at the RSC, it only has 1 week above its own moving average. For me, from a technical perspective, I'm looking for 5 weeks above the moving average for it to be considered hot. So we've got another at least 4 weeks to wait before information technology really hots up a little. And then in terms of a cold sector, I've just chosen healthcare. There are some other ones there, but look, this is pretty much a dog at the moment. Let's be real. So we're underneath our moving average, and the RSC is not only sloping down at one heck of an angle with lower highs of the RSC, it's underneath its moving average as well.
Well, there's a lot in there. So healthcare, cold, that's something to take note of, considering it's traditionally thought of as a more defensive sort of sector here in Australia. I would, though, while we've got you, Louise, like to broaden things out a little bit. The big question is the bottom in as far as global stocks, particularly in the United States? When we look at the Nasdaq, we've had some favorable sort of headlines coming from Trump. He's selling AI chips all over the world, particularly in the Middle East. So is the bottom in?
Well, let's have a look at the Nasdaq. This is actually a little bit higher with volatility. We're starting to get into an area where it is tough to trade. Over 5% is tough to trade, but over 7% is incredibly diabolical. So we are at 6.10% in volatility. And look at that gap. Oh, you don't usually see this in an index, but we do have a definite gap upward in the Nasdaq. So this is a volatile little one at the moment, but we are in limbo compared to the Australian market. So if you're looking as a strategy to invest in ETFs, index-based ETFs, you'd be putting money into the Australian market currently, but you'd be getting pretty close to wanting to reinvest into the Nasdaq 100 ETFs.
What about the S&P 500? Does that hold for it as well?
Yes, it's got a similar look, but luckily a little lower in volatility, which is traditionally the case for the S&P 500 compared to the Nasdaq. But I just am so curious about this gap. Like if we look at this chart, there is no other gap upward in the time since 2020 on the S&P 500 or the Nasdaq. So this is a very significant pattern. It does suggest that this is a fundamental shift, and we are not all that close to resistance, but we will probably approach that if it does keep going up in the next week or so. It is in limbo compared to the Australian market, but it still represents a lovely opportunity for traders to get involved.
Well, thank you. We'll leave it on that note then, Louise, because I think there's some actionable ideas there. Really appreciate your time as always.
Absolutely.
Louise Bedford there from tradinggame.com.au. That's today's episode of The Trade. Stay with us.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.